Hello, good day. This is the daily analysis. The S&P 500, Nasdaq, and Dow Jones indices on January 5th prices. As predicted, with the start of Monday, they have entered a bullish phase and are moving towards the accumulation zone. There is a buy-side liquidity point and a rejection block area here, as predicted. So, after the accumulation zone, the liquidity point may enter a bearish phase, which could ultimately target the swing low. Set it here, which we can, in the daily FPG zone, and in the optimized 4-hour time frame, look for a trading strategy for a buy position in the market. Also, by analyzing the RSI, we see that the price has entered the zone, has become overbought, which indicates the continuation of the bearish trend, and in this area, it could form an order block. Look for a trading strategy for a buy position at the order block. And if bearish momentum and displacement increase, it could move further down. Keep an eye on the liquidity towards the sell side here. It collects liquidity and ultimately reaches this area, which is a daily optimized FVG with 4 levels. If it reacts as confirmation, we can look for a divergence in the market. If the RSI enters the oversold zone and forms a divergence for us, it can act as confirmation. So in this area, we can enter a buy position in the market. Also, with increasing momentum and bearish displacement, and if the candle closes below this FVG area, we can expect the trend to continue its bearish movement until it collects the liquidity below the trend line here. And finally, in this 4-level BPR area, we can enter a buy position targeting the higher price levels. By analyzing the 1-hour time frame, we see that the price is accompanied by a downward momentum and does not have enough strength to turn bullish and break through the order block area at this point, and it can only continue the trend. Continue its upward trend and collect the buy-side liquidity here. Ultimately, in this order block area, we can look for a sell position targeting the swing low in this section, which could move upward. If higher highs are formed here, by identifying a shift in the trend, we can enter a sell position, place the stop loss behind the zone, and set the target at the swing low. In this section, after collecting the buy-side liquidity and closing the price, we can also use this opportunity for a sell position in that zone. The entry point is in this segment. Stop loss behind the swing, targeting the swing low. In this section, with the increase in momentum, and as the market approaches, it can move downward and eventually reach this unique unicorn zone 1. It can react at this level, and in this area we can look for a buy position in the market where we can use the RSI indicator to enter the trade. If the price enters the unicorn zone and forms a bullish divergence for us, we can use this situation as a confirmation for a buy position in the market. We can use it, but if momentum increases and the price closes below the unicorn zone, the next support levels are the order block zone, and after the accumulation of liquidity, the sequence of the order block zone in this area can serve as a strong support level to hold the price towards higher targets. Also, with increasing momentum in the market and price action in this zone, it can enter a bullish phase, so that liquidity moves toward the buy side. To accumulate liquidity here, which means we can also look for a buy position in this zone in the market. In the index, it can happen soon. We can also see this on the 4-hour time frame. The price, as predicted, has entered a bullish phase, and with further analysis, we can see that the swing low that has formed here is located in a high potential zone, which could signal a bearish turn in the market, which could allow it to continue its bullish trend to keep going. Ultimately, there is a reaction to this zone, which is an order block or rejection block located here. If the price moves downward and upon reaching this zone, if a swing forms with a lower low and the RSI shows a correction, if a divergence forms, and if the price bounces from the oversold area, we can use this opportunity to enter a buy position. If momentum increases in the market, the price can continue to move downward. The trend continues, and ultimately within this BPR zone, we can look for a trading opportunity. Also, with increasing momentum in the market, the price can continue its upward trend. It can collect the buy-side liquidity here and eventually enter this FVG zone. It can reach the 4th level. By analyzing up to this 1-level time frame, we see that the price is accompanied by a downward momentum, and it is predicted that it will enter the BPR zone, have a reaction in this area, and target the swing low at this point where a bullish order block is located. And there is also a liquidity trend line here, which with increased momentum in the market can be liquidated. It can sweep the sell side and eventually react to this BPR zone. Also, if we observe a weakness in this order block area, we can observe a weakness. In these areas, we can look for a buy position in the market. We can set our stop loss behind the swing and determine our target based on the swings in this section. With increased momentum in the market, the price can also move upward. It can continue its bullish trend until it collects the buy-side liquidity at this point. And finally, it enters this unique unicorn zone, which is an optimized level in the market. In the Dow Jones index as well, we see that the price is accompanied by a downward momentum. There is buy-side liquidity here and in this section, which we can observe by analyzing the RSI. The price has reacted to a zone, meaning it has reacted to the 58.62 RSI level, and by analyzing the potential pull zone, we can predict that the price will continue its movement and reach its own target and reach it. With the price movement in the 50% zone of the candles, we can look for a buy position in the market, or with the increase in bearish momentum, we can look for a trading strategy in the 4-hour order block zone. Also, by closing the price below the order block zone, it can enter this daily order block zone and be optimized. It could become a 4-hour zone, although it is predicted that the price will inevitably move down from this significant zone, subsequently collecting the crucial sell-side liquidity here, then entering this important 4-hour FBG zone and the precisely optimized 1-hour zone. From this specific area, it will then enter the profit-taking phase to effectively collect the remaining buy-side liquidity here and continue its movement toward higher price targets. If this breaker zone is broken in this section, it can enter this 50% rejection block zone. Here in this area as well, we can look for a trading strategy for a buy position inside the market. If at least a lower swing low forms in those rejection block zones, we can set our stop loss accordingly. Place it behind the swing, and if a reversal is detected in the downtrend, enter a buy position and set our target accordingly. Set the liquidity highs and swings in this area as our targets. Wishing you success and profitable trades.